a staggering rally, the stock of BSE has seen a dramatic decline of 38% in the past 3 months amid market-wide sell-off. Nifty has plunged to 52-week low. Trading volumes have dropped and the new issues in primary market have all dried up. BSE, which benefited from the booming capital markets post the pandemic, is now reeling under the pressure of weak sentiment in the equity markets. No doubt the stock has corrected sharply and valuation froth is all gone. But equity markets may see further downside amid high inflation, rising interest rates, geopolitical issues and growing risk of recession in the US. Given the fast-deteriorating macro environment, why invest in BSE, a proxy for capital markets? Stock exchanges have a unique and durable business model with high entry barriers. After the initial setup, there is no major capex in the life cycle of the exchange. It also enjoys negative working capital in the form of client margin money. An exchange's business model offers high operating leverage as a large chunk of operating cost is fixed in nature. Contrary to popular belief, a large portion of the exchange's revenues are not linked to market activity, which gives stability during uncertain times. For instance, a bulk of BSE's revenues includes annual listing fees, data access fees and mutual fund processing charges that are relatively less volatile. So why BSE? NSE continues to be the invincible leader in the equities segment with more than 90% market share. BSE is a distant second with a market share of only 7.5% in equity cash segment as of end of FY22. Even with a paltry market share, BSE reported robust earnings in FY22. Consolidated net profit surged 73% YOY in FY22, driven by higher transaction volumes, partially offset by lower investment income. Average daily turnover in equity cash segment grew by 29% YOY in FY22. But a lot has changed since March 2022. ADTO has declined 20% in FY23 till date. The fall in trading volume will adversely impact BSE's FY23 revenue as well as earnings. BSE's efforts to recoup market share in the equities segment have experienced little success, but its foray into new segments is encouraging given the fact that they're witnessing strong traction right now. It operates one of the largest mutual fund distribution platforms, BSE Star MF, which stands to gain from higher equity inflows and growth of mutual funds. Total transactions on Star MF grew by 99% YOY in FY22. The management is also looking to monetize Star MF platform through strategic sale to investors. BSE's market share in segments other than equity trading, the likes of commodities, INX, SME listing, they're all looking very impressive. It has launched a power exchange which is likely to go live in the first quarter of FY23. BSE eBix, the insurance broking platform, also looks promising. That said, except Star MF, other segments are still at a very nascent stage and are not contributing to revenues yet. However, we do expect them to translate into good revenue at a future stage. Stocks of platform businesses have collapsed in the ongoing market rout. While BSE is also a platform business, unlike new age platforms, it generates strong cash flow. Net cash on its books stood at 2,200 as of March end. Large cash flows are expected to be returned to shareholders through higher dividend payouts as well as buybacks. If you look at the stock, it has corrected more than 50% from its 52-week high which we saw back in March. BSE is currently trading at 15 times estimated core earnings for FY24, which is attractive in light of financial strength and future growth levers. The stock offers a value proposition of low risk and high return potential, making it a worthy buy in a volatile market. In the near term, bounce back in trading volumes can be a trigger for positive stock movement. In the medium term, value unlocking in Star Mutual Fund can boost the stock price. And in the long term, key catalyst would be NSE's listing. While the IPO of NSE may be some time away, the stock price of NSE in the OTC market is more than 3,100 per share. While NSE is commanding a staggering valuation of over 1.5 trillion rupees at 3,100 per share in the unlisted market, the listed peer BSE's market cap is just around 7,800 crores currently. Among key risks, BSE is vulnerable to weakness in equity markets and adverse regulatory changes, both of which can negatively impact volumes and profits of the exchange.